Morning guys, I want to shoot a quick video to discuss what's happening in the market right now and a couple of things which I'm observing. I've had a couple of messages sort of over the last 2 or 3 weeks and just things that I'm observing, and I've seen a couple of comments from people within the group as well, which surprised me a little bit. So I'm going to highlight it. So what's happening in the market right now? Is there a shift? It's certainly looking that way. So let's look at the things which we can see for definite. There's a lot more properties. I did a video on this probably, I don't know, I think it was about 6 weeks ago, something like that. If you put your postcode into Rightmove within a couple of mile radius, what you'll notice is there's a lot more properties now starting to say reduced on them. So that's usually one indicator to look for. I've seen this pattern now. I've obviously been doing this for some time, and you start to see certain patterns. So there's definitely a lot more properties now that are coming on, and they're saying that they're reduced. Rental demand and rental prices have gone through the fucking roof. So you just can't get anything on rent at all. We advertise something and it just goes straight away. It's just crazy. And also rental prices as well. Now, I also did a video on this. Was it a video or a post? I think it was a post. And I'm going back probably about 4 months ago. And I was quite honest in the post saying, because I'd not been on Rightmove for some time, I couldn't believe how far, and this was me being open and transparent, I couldn't believe how far out of tune I was with rental prices, what they were actually going for. And I was quite shocked to see that in my area, properties that would maybe be like 500 quid a month for rent were 750. So it wasn't like a little increase. We're talking like a 50% uplift. And just going straight away, another thing which I noticed was I used to be able to go on Rightmove and there'd maybe be like within a certain radius I used to search for. You'd have like 500-600 properties that would be on the market. And then looking now, there'd be like 60 or 70. And again, that's a sign of supply and demand. So there's definitely some shifts happening. Some are happening quicker than others, and some are being progressive. So what does it mean for us lot? Another post that I did probably, I don't know, 6 months ago or something, and I said just be mindful with doing larger developments, because if there is a drop in the market, when you're trying to flip out at the back end, if you've got, say, a 25% margin and there's a 25% drop, that's your margin gone. Now, you've always got the safety net of being able to sell to break even, but if you're intending to hold on to those, it now means you've got 25% left in that deal. So you just need to be aware of that. So I had a message a couple of weeks ago, and I seen someone post something out of this group, commented on one of my posts, and I was quite surprised to see it, to be honest. It does demonstrate the difference of those that have done the 3-day to elite, for sure. Elite training is far more intense, and there's a lot more to it. 3 days is 3 days, the 3-day advanced. Elite is 11 days with the mentorship, and obviously a lot longer hours. Now, I've seen somebody comment saying my properties were working well, somewhat along those lines, and I'm having to sell them. And there was somebody a couple of weeks ago who posted something similar. Now, one of those, I actually know him, he's from the local area. And I told him I was being honest, and he'll probably watch this. I said, you're playing victim a bit. He said he had 4 rentals. They were all doing well. He was making decent cash flow from all. But now with the uplift, because he hadn't froze his prices, it was going to kill a chunk of that cash flow. So he said it was pretty pointless doing the training. So I then asked him, how much uplift have you had from them 4 properties? When he worked it out, he'd had over £80,000. So he was telling me that it was pointless doing the training for 1,400 quid plus VAT when he's made £80,000 uplift from the capital gain, which we've seen in the last 12, 18 months. The capital increase has just been absolutely crazy. So when I pointed out the terms of ROI, it was a bit like that. Don't be a dickhead series. Thinking of what you're actually saying. If you've put 1,600 quid into something, and even if you don't move forward and you've took 80 back out of it, then shit, that is one serious return. So my message is, guys, that I've always said this. I've said this from the very start. What I'm teaching in property, the 8 fundamental areas in the property model, them areas don't change, but the strategy within that does change. So my strategy's changed multiple times in property and in business. So our business model for the training business, for example, was we used to do a free one day. And some of you guys have come to that one day and then went on to the 3-day advanced and then on to elite, etc. When COVID happened, we lost all of that marketing, and obviously the hotels they stopped anyone from coming together. So we were unable to do that. That model that we had that employed those staff members and was successful, that strategy was completely flawed when COVID happened. So we had to adapt. We had to look and go, well, shit, our entire training business has been killed right now. So this is when we sat down as a team and went, right, if we can't bring them to an event, what do we need to do? So we went, right, what we can do is we can give them some free content like the book so they can absorb something we've done, and then we'll do a free strategy call and we'll explain what the training is, and the coaches can offer them the 3-day advanced at that point, because we didn't need to bring people face to face. So the point that I'm making, guys, is your strategy is going to change. Right now in our business, we're looking at changing some of our strategies. My property strategies have changed multiple times. So one thing for those that have done the training, which is most of you, remember something that I always say, that you'll either be in the problem or you'll be in the solution. You can't be in them both together. And on the 3-day, there's actually a slide, and I bring it up and say, this slide is not duplicated, and the reason why I put it on again is to emphasize the point of problem and solution. So that event plus response equals outcome. So you may have to adapt your strategy slightly right now. But remember, if there's something negative happening, there has to be something positive happening. It's impossible to have one without the other. So an example of that is, if there's less properties on the market, for example, then what it means is supply and demand is going up, which means that'll push up the prices of rental or your rental income, your rental amount that you charge, that will go up. It'll also drive up the price of prices as well, because with that supply and demand, that naturally pushes up the prices. So there has to be a winner and there has to be a loser. There has to be a positive. There has to be a negative. So if your strategy starts to become less effective, that doesn't mean that something doesn't work anymore and that it's game over. It means you need to adapt slightly. It means that this particular way of doing something is not working. If you look at pro athletes, for example, certainly in the boxing world, you'll see some athletes, boxers, they'll get beat, and then they'll go, right, that strategy for that particular opponent was not the right way. So what I'm going to do is I'm going to change my strategy. I'm going to come back, and then quite often they'll go win that rematch because they've deployed a different strategy. It's no different to what we're doing right now. So if, for example, interest rates are increasing, what that means is there might be an and I'm not telling you to do this, I'm just giving an example. So let's say you're the guy who's made 80 odd grand, then you might look at it and go, do you know what, why the market's at this highest point right now, my rental's being squeezed, so I'm actually going to sell, I'm going to pull my 80 grand out, and with that 80 grand, because interest rates are going up, you might want to be on the other side of things where you now go, well, actually, for the next 18 months, I'm just going to watch things and I'm going to put my money in. I'm going to invest with somebody else. So I'm going to invest with someone who's got a solid strategy, someone that I've got a solid contract with, somebody that I've got either a personal guarantee or a charge over that property in some way, and I know my money's safe. The more interest rates that go up, the more that you can ask for in terms of an investor. So where people, I've seen people offering 5-6% per annum, up to sort of 8, even 10, then 8 and 12 might now be the norm, because as that pushes up, being on the other side of it, it means you can ask for more. So it's just a slight shift in your strategy. If you've made 80 grand and you're getting a 10% return on that, well, then there's 8 grand a year for the rest of your life if you've put it into the right type of investment. So always look at your strategy, guys. You should have a clear plan of what you're doing and what that strategy is, and you should know that. If you're just firing from the hip, military term in terms of not aiming on what you're actually shooting towards, then you're not going to be as effective as somebody who's got putting aimed fire down on that target. So think about where you're going. Think about what your target is. Think about what you want the outcome to be. And this is why I say you should have measurables. So you should be checking in every 3 months, 6 months, 9 months, 12 months. Am I on track with this year's goals? And if you're not, just means you've got to change your strategy. It means you've got to look and go, this strategy is not effective enough to get me to the particular outcome that I want. And this is not so much property knowledge now. This is my ability as a coach. I've done this for many, many years, and this is why I believe makes me the best trainer in the UK, because I'm able to combine that coaching strategies in with my property knowledge. And what I'm talking about right now is more on the coaching side rather than property. So I understand how to get an outcome, which is why I consistently get results, because I understand what it takes to get a result. I've got a clear target. I'm working towards something. If I'm not getting the kind of results I want, then I know I've got to shift my strategy. Simple as that. So for you guys, there's a lot of talk around the interest rates going up, which they are, but also rent's gone up a lot as well. I'm seeing rent increase as much as 50%. So that should offset the interest that's gone up. And if you find that it's not, and your model's not working anymore, then you need to adapt. Don't just hold on to something because it's not working. So let's say, for example, you were making $3,000 off each property a year, and you had 10 of them, and you were making 30 grand, and you were sat pretty. And now that 30 grand has been squeezed down to, say, I don't know, 5 or 10 grand. Then look at that and ask yourself the question, which I always say, where can I get my best bang for my buck? Don't just hold on to it because that was your model. What worked 5 years ago won't necessarily work today. So it might be that actually right now, and Summer Mastermind have been doing this, Summer Mastermind have been offloading a few of their things because they've just been offered crazy prices for it. And they've looked at it and thought, right, I can make 300 or 400 grand off this development. So I'm going to take it right now, and then I'm going to use that money somewhere else. So you should always be looking at your strategy. You should be looking at your goals. You should be checking, are you on track with your goals? Is your strategy effective enough to get you the outcome you want? And stress testing as well. So stress testing this is something we cover more on Elite, but what you should be doing is you should know with your properties, at what point does this model not work anymore? So at what level does the interest rate need to go to in order for these properties to no longer be profitable? How many voids can I afford to have in a year before this model's not profitable? How many repairs in a year can I afford to have before this model's not profitable? And that's called stress testing. So for those that have done Elite, will be aware of that, because we share the stress test calculator, the things that we go over. And maybe it's just a little reminder for some of you guys. So the comment that I'd seen was someone that had done the 3-day, not Elite, and the same as the guy that I was speaking with who had 4 properties. I'm excited right now. These are the times where you get the biggest gains, because when things are just vanilla and they're just floating along, you can always create your own opportunities, and I've always done that. But when there's a bit of a shake-up in the market, that's when the biggest opportunities come. And for me right now, I see great opportunities. So I'm monitoring things. I'm looking at where can I maybe hold my prices down, where can I get some fixed returns, fixed rates rather than variable. Do I think we're going to see more of an increase? Yes, I do. But remember, there's only ever an increase in interest rates to balance out the market. And we've seen ridiculous levels of... I've gained over £800,000 in equity off my portfolio in the last 12 months. So naturally, the interest rates are going up to balance that out a bit. Do I expect that there might be a dip? Yes. But as long as your properties are cash flowing, that doesn't matter. It doesn't no longer mean you can't make money from property. I've done this through a couple of recessions now. I've done this through a couple of times like COVID, the drop in 2008, 2007, 2008, that sort of period. And I've always done really well out of this. It's just understanding, how do I need to adapt in these times? So that's my advice, guys. Be clear on your outcome. Look at your strategy. Do I need to tweak things? Don't be one-dimensional. Don't just think that because I've bought these properties, I have to do it this way. If there's a shift in the market, then it might be time to sell 1 or 2 things, or it might be, right, I'm not going to focus so much on private tenants. I'm going to focus on businesses. So my tenants now are going to be businesses of shops. There's been a big uplift in businesses going back the other way. So in terms of during COVID, we all know that businesses were squeezed massively. Loads of them couldn't trade even. A lot of them went bust. And now we're seeing people recover. We're seeing them come back out the other side. So it might just be looking at things like, do I shift from 2-3 bedroom houses? Do I shift more into the business side? And you've got to be aware of that is always going to shift. So where I've been teaching commercial or residential, the guys on the last 2-3 elites will know, I've been advising that this model now is not as strong as what it was when I was teaching it 4 years ago. And the guys who've done the last couple of elites, I've been teaching them a different strategy. I've been saying this is where my focus is right now. And just to have a look at that sort of your strengths, weaknesses, opportunities and threats. So if you're just tuning in, I would strongly advise you watch all of this because just so you can reflect on your own strategy. The guys who are about to do the 3-day and elite, I'm always adapting to what's going on in the market. Those that are in mastermind, we're discussing these things on a regular basis of what's happening, sharing our ideas and things like that between us. So am I concerned? No, not at all. Am I aware that I may need to change a couple of things? Absolutely, yes. Right now, I don't need to. I'm just more of observing at the moment of what's actually happening. I'm pretty well set up. But there's certain things, like I sold both of my HMOs about 18 months ago. I got a good price for them. And I recognised that they'd served me for over 10 years. They'd been my lifeline. At one point, that first HMO literally got me out of the shit. But a year and a half ago, I recognised that actually right now, I'm getting a better return off some of my other properties. So why the offer's there, I'm going to take it and I'm going to redeploy that money into another area. So reflect on that, guys. You should always be doing that anyway. Naturally, you should be checking in on your goals, looking at where you are, how well are you progressing. If you're not, is that a lack of focus? Is it the fact you don't have goals set? Or is your strategy not effective enough? You can only really adapt based on the knowledge and skills that you have. That's why I say getting educated as quick as you possibly can and having the most knowledge you can allows you to adapt quicker. So that's it from me. Obviously within the community, for me, there's nothing. Yes, there's a shift in the interest rate, but nothing drastic enough to sort of be, right, we need to adapt here. Like there was when when there was the change in 2016. 2015 it came out, and then between 2016 and 2020 was obviously phased in, where you could no longer offset your mortgage, where it dropped from only being able to offset 75% down to 50, down to 25, down to 0. And we adapted. We knew that we were going to be stung quite hard with that government change. Right now, I don't think it's big enough to making any sort of drastic moves. But I am aware there's a shift happening in the market. I am observing it. And this is the great thing with being in the community, that when it does become big enough, or if something does happen, we'll be able to discuss it in here. And we're at the forefront of that. So whenever I've had my biggest gains, just to wrap up now, as it's a little bit like Warren Buffett says, be fearful when people are being brave, be brave when people are being fearful. So when there's been shift in the market and I've watched unexperienced landlords just selling off all of their properties quickly and below market value, I've been on the other end of that, and in them periods I've bought aggressively, and that's when I've made massive amounts of money from that. So right now I don't see anything big enough to warrant any drastic change, but I am very aware that there is a shift happening in the market, and has been for probably the last 18 months. You can see that shift is building more and more, and I do think that there is a drop in the market coming. I definitely do think that. But again, I'm not concerned about it because I'm set up in a good way. I will just evaluate my strategy and go, is this strategy the best approach that I've got right now? We've just locked down a couple of hours and changed a couple of things. Small tweaks, like I say, we got rid of the HMOs. When the interest rates were down low and I was advising this, we locked most of ours in. So me and Gemma got some ridiculous rates. She just shifted one over on 6 of her apartments. And her interest rate is, she's paying half of what she was paying. So great cash flow on those. But yeah, it's about adapting all the time, guys. And if there is a drastic enough shift in the market, those that are inexperienced who act emotionally will be the ones that offload and they'll panic. And those ones will be the ones that dip out. And us guys that are in here sharing knowledge will be the ones that benefit the most. So that's it from me. Take care. Always remember that to evaluate your goals, where you are with them, and your strategy. So that's it. Catch you later. Bye-bye.